Hello, everyone. I'm Sharon Epperson, CNBC's senior personal finance correspondent. We are in a historical moment today as we watch the Russia's invasion of Ukraine. There is so much uncertainty about the loss of life, about what is happening to the global economy, about what is happening to our investments. We are taking a look today at this market uncertainty and making sense of what we need to do now with our money to protect it, to manage it, to grow it for the future. We are looking at people who can help guide us through this time. I know many of you may be looking at your portfolios, watching the news, concerned about what it's going to cost you in terms of everyday prices for items rising all over, where we're looking at gas prices, grocery store prices, everywhere you turn. How do we make sense of this? We turn to top financial leaders for guidance. And that's what we're going to do today. We are bringing you some inspirational trailblazers, faces of change in the financial community who are really making a difference and are here today to give some insight on what you should be doing with your money at this time. I want to start by introducing them. Sharon Bowen is the newly appointed chair of the New York Stock Exchange. She is the first woman or person of color to hold that distinguished role in the exchange's 229-year history. She's also a board member of the Intercontinental Exchange, and prior to joining the ICE board, she was the first African-American commissioner on the Commodities Futures Trading Commission. Sharon Bowen, thank you for joining us. We also have Camilla Elliott. Camilla is the new chair of the CFP Board of Standards. She's also a certified financial planner and president of Grid 202 Partners, her financial planning firm. She holds this position for this nonprofit organization that sets and enforces requirements for CFP certification. And they do this for over 92,000 financial professionals. Camilla is the first African American and the youngest person to hold the position of chair of the CFP board. Camilla, thank you for being here as well.
Thank you, Sharon.
And we also have John Hope Bryant with us, who is the founder and CEO of Operation Hope. Operation Hope is one of the largest financial inclusion organizations in the country, and it was started after a crisis 30 some years ago, after the Rodney King riots in LA. That is when John Hope Bryant founded this organization. He is also an author of many books, but one of them is Up From Nothing, the Untold Story of How We All Succeed. And that is the question right now to all of you. How are we going to succeed through this? How are we going to be mindful of the impact that it's having around the world and be mindful of the impact that it's having on many Americans as well? Sharon Bowen, I want to start with you. Congratulations again on your new role as chair of the New York Stock Exchange. Getting right to what is happening with Russia's attack on Ukraine and the uncertainty that that has caused in the financial markets, I think there are many that are wondering, is my money safe? What is the impact going to be? And so I wanted to get your thoughts on what are the impact likely that we're going to see on the financial markets.
Again, thank you so much for having me today. Obviously it's a sad moment when nations are forced to take up arms, and it's my hope that this will be resolved peacefully and as quickly as possible. It's clear that markets dislike uncertainty, and uncertainty leads to the type of volatility that we're seeing today. We've seen this type of volatility before, particularly over the last 2 years with the pandemic and with the meme stock boom. But the function of our markets is to make sure that they function smoothly in any condition. And in addition to the fact that we've been able to weather the storm here, I just want to highlight that our unique trading platform, where we have traders on the floor who bring judgment and experience, helps our markets to really operate smoothly. Also, volatility brings record volume in terms of transactions, and just last month, we handled over 491 billion electronic messages across our platforms. That's $500 billion. And so in short, our markets are here, they're functioning really well and really efficiently.
I think that's important for people to understand how they're able to to function efficiently, and what protections are there for them if there is this concern of a major severe sell-off? There are protections at the NYSE to make sure that it is not as severe as some may fear, correct?
That's correct. There are definitely positions that protect for really wide volatility in our markets as well, and so the markets are going to function as we expect them to today.
Absolutely. Camilla, when I look at and I have it right here on my screen, looking every second at the Dow and the S&P 500 and the NASDAQ, where we stand right now, many people are doing that, and they're seeing the fact that Dow was down 800 points earlier this morning. It's recovered a bit, but still down about 2%. That is concerning to a lot of people who have money in the market and are concerned about the fact they may need it quickly because they wanted to retire soon, or people who've never seen this before because they've been in the market for the last 10 years or so, and it's been really great for them. So what do you say to people right now who are looking at this kind of volatility in the markets, and what do you say to ease their concerns?
Sure. Thank you, Sharon. One of the things I always start with is there is no reward without risk. Just participating in the markets itself and generating the returns that we've had, as you mentioned, Sharon, over the past year or 2 years have been phenomenal. So with the positive returns comes market volatility. And speaking to those that are thinking about retiring or pulling money from their account soon, that's why we always focus on asset allocation and assessing your risk tolerance. So if you're someone who is planning to retire in the next year or two, your portfolio should have already been adjusted to have some liquidity, to have some investments in money market or CDs or short-term bonds or intermediate-term bonds. So if you don't have a financial advisor, or you do have one, this is a good time to seek or get guidance as to what's the appropriate asset allocation for you to ensure it meets your cash flow needs and it meets your risk tolerance. This is a great time, I always say, Sharon, that people do a gut check of their own risk tolerance, right? People always will say, oh, yes, I can go 90% equities. I'm okay when the market is up 30% as it was in 2021. But when there's this volatility, this is when things get real. And it's important for people to really evaluate their risk tolerance and time horizons accordingly.
Yeah, it's really important to make sure that you kind of see this, at least I do, as the silver lining of taking a moment now to look at where you stand and what you own and what you owe and how to figure out where to allocate that money is so very important. We talked about investments, Camilla, but very quickly, I wanted to also ask you, in general, when you're thinking about people who are saying, I need to have some money in cash, though, right? I mean, this is a very tumultuous time. Is there a rule of thumb of how much money that they should have in cash, and where should that be?
Yes, thank you. So we always recommend our clients to have at a minimum 3 to 6 months of their monthly expenses liquid. And by liquid, we say at a local bank, at a high yield savings account, or a money market, something that is pegged to $1 per share or doesn't have any volatility in terms of share value. And it's for things like this, days like this, when you have concerns about the market, the geopolitical risk. Of course, there's a lot of currency risk occurring right now. Having liquidity is key during turbulent times. So if you're someone who has a partner and both of you work and have sufficient income, we typically say about 3 months. For those that are single, we say at a minimum 6 months of liquidity is recommended.
Excellent. There are some people, unfortunately, that are saying, I don't really have that much liquidity. I am living paycheck to paycheck. I am trying to make sure that I'm able to pay my bills, and I could before gas prices skyrocketed, before the prices that I was paying for my groceries every week also went up much more than I expected. And now what do I do? How do I manage day to day in light of I don't know how high prices could go? John O'Brien, I wanted to bring you in to talk a little bit about your thoughts on that and what is available to people to try to find out in their community how they can get help.
Yeah, first of all, I want to commend CNBC. And I want to say that if it wasn't for my mother, Juanita Smith told me she loved me every day of my life, I'd be remarkably insecure right now. I got Camilla, Sharon, and Sharon on this thing. And you some bad sisters. I mean, look, I got Sharon to smile. She got to be serious all the time. No, this is amazing. And I just want to note that if Dr. King was alive today, he'd be incredibly proud. I think he is alive in all of us. So look, we've been doing so much I'm talking about African Americans now, Sharon. We've been doing so much with so little for so long. we can almost do anything with nothing. I mean, whether you're white, black, red, brown, or yellow, yes, it's true, you want to have some more green. But if you're a single black female with three kids and you've survived up until now, you need a Nobel Peace Prize anyway. So what we want to do now is to understand if you can't make more money, you can save some money. So at Operation Hope, we're raising credit scores 54 points in 6 months, 120 points in 24 months. Even when the market is doing this and doing that, nothing changes your life more than God or love than moving your credit score 120 points. So let's start there. We can change that. Number two, we're moving debt down $1,400 debt reduction over about 6 to 8 months, working with our applicants, which all services are free. We're increasing savings about $900. As you know, most people don't have $400 of savings for an unplanned event. So these are three things having nothing to do with the market to change your life. Now let's be very practical now. Somebody's watching this, they know somebody who makes $35,000 a year, 3 children. What do? Because you seem like you're boxed in. You got options. One, earned income tax credit. If you listen to this and you never heard that, congratulate Sharon Epperson. Thank CNBC, they just gave you a check. It's $7,000 for the first, $6,000 if you have 3 children, right? Cash. If you never filed, it's retroactive for 3 years. That's $15,000, $16,000, $17,000. And there's a $3,000 per child tax credit tied to what came through the last stimulus bill tied to COVID. Your kids never made you any money your entire life, but now you can get $3,000 per child. I'm joking, but I'm serious. So you add $3,000 per child, that's $9,000 plus what I just mentioned. I mean, that's equaling your pay almost. And now we're going to look at, okay, you smoke. People tell you you'll die if you smoke. That hasn't worked. What if I tell you you're spending $3,000 a year on smoking and another $3,000 a year going to Starbucks? I'm not picking on Starbucks. I love Starbucks. Hello, Melody Hobson, the chair. But that's $6,000. If you make $35,000 a year, that's 20% of your income. Make more, spend less. So if you just do these simple things I just mentioned to you, your life changes. If you drive down the street right now, listening to this.
Absolutely,
go ahead.
John. You know, taking it to doing those simple steps is so important. And Camilla, I'm thinking to March 2020, because that is the closest thing that we can think of in immediate terms of where we saw a sharp market slide. And I remember at that time asking a number of financial experts, what should I do? What should we be doing right now? What should investors be doing with their retirement savings? And it was the head of retirement research at a major firm that said, you need to look at your debt right now and make sure that you're paying down your debt. And I thought, wait a minute, your role is to talk about retirement research and how people can maximize their retirement savings. And you're saying that people shouldn't even be focused on that, leave that alone, focus on your debt. Do you agree with that at this time? Is this something that people should be looking at, what they're spending, what their debt is, rather than their investments?
I wholeheartedly agree with that statement. Control what you can control. We can't control the markets. We can't control what's happening, abroad. But what you can control is your spending, is your debt. And what people don't realize is that if you have debt, you have to take out more money from your retirement account to pay for that debt service. So what you can do now is prepare yourself, limit your need for cash flow in retirement, or now in general, to have to pull from your investments, to have to pull from your resources, and just put yourself in a much better financial position. One of the things I want to just make sure I share with John is, I was part of the Volunteers for VITA program. I did it for over 10 years, and we did taxes for low-income families and in the city of Philadelphia. And one thing I'd be remiss not to add, it's tax season right now. So this is a great time to not procrastinate, to file your taxes, to get the earned income credit, to get the child tax credit, and take that refund that you get and use that as your emergency account. Use it as your stability over the course of the year to prepare yourself for, the increased prices of food and gas and all the things that we anticipate this year.
Absolutely. Absolutely. So true. I'm so excited to have the three of you here, and I have many, many questions for you, but our audience also has questions. And I want to encourage you, if you're watching, as you're listening, please submit your comments and questions, because I want them to be able to hear from you as well and what you want to know right now. We have a comment right now from Wendy Norman, who says that investors flip the switch when there's a correction. They can easily reject short and long-term thinking when stocks sell off. asset allocation is important, but managing expectations for the future is equally important. And Sharon Bowen, I know that, working with the major organization, the largest equity exchange in the world with the New York Stock Exchange, managing expectations has to be a critical component of what you're doing there at the NYSE. How do you see that, not as a financial advisor, but as someone who is in charge of the system that allows us to buy and sell these stocks? How do you manage expectations?
Well, first, thank you for recognizing I'm not an investment advisor, and got great people here to talk about the specifics of that. Our markets are the envy of the world, and I think that's because we're really transparent. Transparency builds trust in our markets, and it also adds liquidity to our marketplace. And with liquidity means our markets will function a lot more smoothly. We are the envy of the world because of that transparency, and it's why companies choose to list with us. It's also why investors want to make sure that there's a level playing field. And part of my job is to make sure our markets remain the envy of the world, that they're transparent, accessible, sufficient way to raise capital as well. So that would be what I would tell the folks out there.
Absolutely. I want to ask you this question, and I'm sure that you may get asked it a lot because it is what people are talking about. But when you're looking at stocks and looking at equities, many people are saying, okay, now that we're seeing this volatility, I need something to provide a hedge. Whether that is that going to be gold? Is that going to be Bitcoin or cryptocurrency? I need to take some of my money away from the stock market and put it in some of these other hedges. What do you say, as someone who is chair of the New York Stock Exchange, to those who are considering taking money out of their stocks investments and putting them elsewhere as a hedge against what may happen with their equity portfolio?
So interesting. Again, I'm not going to give you investment advice here, but what I will say for the investors is to be informed. To make sure that you understand the markets and the various different asset classes that are out there, and learn as much as you can about these markets.
Sharon, are there like 2 things or 3 things that you would say, and I'm thinking for those new investors, novice investors who are really enamored with cryptocurrency, may not understand it as well, but understanding why having equities in your portfolio is also very important, what the pros are for people who are just starting out, and not as an investment advisor, but just as someone who has been in the commodities markets and looked at the equities markets. You need to understand these asset classes. Why is it so very important for people to do that as they're thinking about where am I going to invest?
Again, it's part of it is, I think Camilla mentioned before, part of it is about your risk tolerance as well, and to look at assets through that lens in terms of how risky it could be for you. Risk comes return as well. So again, I would just encourage people to learn as much as they can about the markets. And I do want to applaud, the work that you guys are doing on financial literacy as well. And I want to make sure our audience knows about those kinds of programs. I'm proud of the work we are doing here at the Exchange on financial literacy. And so that's also a really key component, is to make sure investors understand what they're facing.
Yes. Camilla, in your role as the chair of the CFP board, financial literacy, of course, is a very important component of what you all are doing as an organization as well. And I want to pose the question I asked to Sharon Bowen to you in terms of investors who are now looking at various asset classes, especially in such a tumultuous stock market environment. How do you encourage investors to understand the benefits of owning equities, owning fixed income, perhaps looking into cryptocurrency, looking into gold, other assets? How do you make sure that they have a diversified portfolio, but also an understanding of investing is not just stocks, but that's a big part of it?
That's correct. So, and the one thing that we believe in is holistic financial planning. As a certified financial planner, we don't look to say our goal is to give you a 15% return on your portfolio. Our goal is to make sure that your investments allow you to reach your personal goals, whether it be purchasing a home, retiring, providing generational wealth, etc. So that is always our framework. And that helps us get through these difficult times, because we always go back and say, yes, the market may experience volatility, but has anything changed with you personally that requires us to change your allocation in a significant way? And I think your question is great regarding, should we hedge with Bitcoin or cryptocurrency and these other very new asset classes? And what I say to them is make sure that you're informed and make sure you understand something called correlation. So something can be different, but it can also have a high correlation. Like I noticed today, the stock market is down and many of the cryptocurrencies are down today as well. So that strategy would not have been fruitful for you at all. It would have actually doubled down on the risk that you have in your portfolio. And so that's why I always encourage individuals, if you're looking to place these complex transactions, you do one of two things. You learn a lot about it, you spend the time and you read and you understand the investment, or you reach out to a professional to help you guide you through that process.
Absolutely. As we are here with tremendous trailblazers in the financial industry, I want to be sure to make sure that everyone understands how important their role is in what we're seeing right now in the landscape. We're talking about, Wendy made the comment about managing expectations, John. And yes, managing expectations is important, but aspirations are extremely important as well. And creating an organization 3 decades ago, as you did, creating Operation Hope, came out of a crisis time where aspiration was so critical. Why is that key to leadership in general, but leadership in the financial industry in particular, that aspirational aspect of it?
Because there's 3 mindsets. There's a fear-based mindset, there's a surviving mindset, there's a thriving mindset, and there's a winning mindset. Most of our people are in a surviving mindset because of the history we all know that led to Black History Month being necessary in the first place. So our self-esteem was damaged in the way in which we came up in this world. And if you hang around 9 broke people, you'll be the 10th. So now you have really smart, brilliant people who are in a surviving mindset. You can't create in that mindset. You got to get at least to the middle class mindset of a thriving mindset, and really to where I think these ladies are, in a building mindset. Builders are winners, and winners knew they won something before they ever even won it. They knew they could win it. So is the glass half full or is it half empty, Sharon? That's really how you see it. That mindset is everything. Making money and building wealth are 2 different things. Most people I know are trying to make some money. No, you just want to build wealth. You build wealth in your sleep. What's a hedge? Your associate from our Shiro from NYC can't say this, but I can. Hedge with a home. Hedge with a home in the hood. Go find the best home in the worst block in the inner city. Inner city in France is called Paris. An inner city in the UK is called London. Only in inner cities in America do we run away from them. They're centrally located real estate. Buy it, rehab it, rent it, and hold it. Affordable housing. Now you're going to do affordable housing for people, good for society. It's going to be good for your pocket too. The real estate has gone up over the long part of history. It dips, as you know, but it always corrects above the line. By the way, Sharon, today I invested. In the S&P. So buy on the dip also. We shouldn't be a mindset that's survival based runs. But you actually want to understand there's opportunity in the momentary dip.
Exactly. Thriving and building that thriving mindset is so very important. And one of the things I wanted to ask you about, Sharon, is how do we work with others to build that thriving mindset? You are very influential, very dedicated to Seneca Women. And I wanted to know if you could talk a little bit about your involvement with that organization and the importance of, whether it is that organization or another, in having allies and building some type of thriving mindset to achieve the goals that you want to achieve, whether it's for the Black community, for women, for people of color, for everyone. That having those allies and building that thriving mentality and mindset is very important. And I think your work with Seneca Women is something that shows that.
Really excited about the work we're doing, and been honored to join Ambassador Milan Bevere and Kim Mazzarelli, who started Seneca Women several years ago. And what we try to do is amplify the voices of thought leaders and women entrepreneurs and to find ways to empower women and girls economically. We know that women control something like 75% of the purchasing power. Yet, early on I questioned, why were there barriers to access to capital and why women entrepreneurs were having issues in getting bank loans or being funded by venture capital firms. So part of what we try to do is to look at those barriers that are there. And some of it, I think John mentioned credit being one of them, and the lens through which we view credit. Is it just about FICO scores, or are there other indicia of credit that we should be looking at? I'm just really excited that we're even having these discussions today, and particularly I think the pandemic showed us, the disparities in terms of, who was, the populations that were hurt the most, the underrepresented especially. And so I think in trying to solve for these, I think it's really important that we look at each of the barriers that are there, whether it's in housing, whether it's in education, whether it's in healthcare, whether it's in wealth generation, which wealth generation takes, generations to build wealth. And so I just think it's important that we're all looking at these issues, and that it's a conversation that is not a monthly conversation. Next month is Women's History Month as well, but that it's an ongoing dialogue. So I'm just really proud to be involved with efforts such as that.
Absolutely. And Camilla, I know you've been involved with efforts like this as well through the CFP board, even before you had this role as chair. Several years ago, the CFP board and the Center for Financial Planning started a series of diversity summits, doing white papers looking at the number of women and people of color in the industry as financial professionals, and the need to make changes. And then fast forward to 2022, and for the first time, an African American is the chair of the CFP Board of Standards. So it is really taking what you say and putting it into action. But not many firms, firms may be somewhat reluctant to do that. How important is transparency? We're talking about it for the markets, but in terms of leadership and in terms of growth in leadership for women and people of color in financial services, how important is that transparency, getting the data, and then adhering to some of the decisions that are made in terms of increasing the number of diverse talent in the industry?
Yes. So I think the issue with accountability is key. I think sharing statements that you want to increase the diversity and inclusion of your firm, but not sharing any statistics or numbers, not sharing the way you're going to go about it, that doesn't inspire trust, and it doesn't encourage underrepresented groups to want to be a part of your organization or your movement. No one wants to feel tokenized, right? So I think that's why it's really important, with the CFP board, we've been sharing the percentage of Black and Hispanic and women CFP professionals. And we've been very, with a lot of work and support from our partners, we've seen double-digit growth over the past 2 years. So for firms, it's understanding that accountability is key and transparency is key, and that actually will result in improved performance, because people will want to be a part of your organization if you see that you're holding yourself accountable and you're being transparent with your numbers. And we at the CFP board also recognize the demographics of the US are changing, right? That we can't continue to have a very homogeneous group of CFP professionals serving the public. About 14% of this population is Black, right? And unfortunately, only about 2% of our CFP professionals are Black. So we have a long way to go, but at least we are sharing, the numbers and our commitment and how we're going to get there and how we're going to grow.
Absolutely. And that's in financial services. When you look across the board at the S&P 500, when you look at the number of people of color who are in the C-suite or sitting in a board seat, the numbers are dismal. And there are steps being taken, right? Like the NASDAQ rule that has been proposed to make sure that there's diverse talent in companies that are trading on the NASDAQ. I'm sure that the NYSE is looking into this issue as well. You, Sharon, have been on the board advisory council looking at diversity issues for several years now. How is the NYSE approaching this, not just for financial services companies, but ensuring that stocks of companies that are listed there are also diverse in terms of the C-suite and particularly in terms of their board?
Yeah. So in looking at this issue, we thought about where do board members come from, and they tend to come from relationships. And so we partnered with CEOs to say, why don't we build a pipeline of board ready, diverse, and women candidates? Nominate someone that's already board ready and already tested. And so when we started the advisory council, maybe the first year we had 35 candidates, and now we're up to 180 candidates, and we're growing. But the key is we now have a growing pool that are 2,400 listed companies who are looking for diversity in their boards. They've got a place, a resource to go to find diverse candidates. So I think that's one of the ways to sort of tackle it. It's one of the ways we decided to solve for that problem, was to be a resource. Likewise, we know our companies are on different pathways with their ESG journeys. In terms of diversity and inclusion being a big part of the S&G of ESG. And so what we really want to do, and what I plan to do with my platform, is to help to work with our listed companies as they travel along their ESG journey. And I agree with Camilla in terms of transparency. It's something that's totally key. It's something obviously that our markets are really about. It's something I've always been a big proponent of. But I think even more importantly, I think the fact that we have so many people who are doing more than just talking, but who are actually taking real positive steps, it really excites me that I do see some momentum.
You see me smiling too, Sharon, because that's what's happening. We are seeing change happening, and it's because of the three of you and many others, but change makers, faces of change in the financial services industry, in the financial world, are making a difference. And that's why we were so excited at CBC to bring these leaders to you today. So as we think about the market uncertainty and how to manage through that, let's think about the leaders that are there that can help us in our own communities and outside of our communities to make a difference, to make a change, and to grow together. I want to thank you, Sharon Bowen, the chair of the New York Stock Exchange. I also want to thank Camilla Elliott, who is the new chair of the CFP board. And thank you to John Hope Bryant as well for your leadership with Operation Hope for so many years. All of them are friends of CNBC. You will see Sharon later today on CNBC. You will see Camilla on CNBC.com right now if you go to our website. And John is a frequent guest as well. These are the voices that you need to listen to. If we didn't get to your question, know that it will get answered at some point on some form, whether it's on LinkedIn or one of our other social platforms. We will try to answer your questions as well. Thank you so much for joining us. I'm Sharon Epperson. Let's keep rising. Let's keep growing together.
Right.